Is the Indian stock market heading for a crash? In the last 3 months, we have seen a drastic fall. And if you are like most investors, you are probably wondering why. Is it the global economic slowdown or are there deeper issues with the Indian economy? Stick with me till the end and I will walk you through the shocking reason behind this decline and how you can navigate these tough times. Don't miss this crucial information. Total, I think, 9 reasons uh, of this fall. First is foreign portfolio investor. We always hear that due to FII, earlier we call it FII. Now it is called FPI, foreign portfolio investor. And FPI withdraw money from Indian stock market. That is why Indian stock market is falling. So we understand what is FPI and who are the investor behind it. Okay, and also I will share you the Excel sheet, and in that Excel sheet I will show you the percentage of contribution in Indian stock market of actually FPI contribution today. Okay, but I will share you in the last. At first I will share you what is the reason. One reason is foreign portfolio investor outflows. Second one is geopolitical tension. As we know, there is conflicts in the Middle East, particularly between Iran and Israel, have heightened global uncertainties adversely affecting investor sentiment in India. And the third reason is high valuation and profit booking. This is the biggest challenge, and due to this reason, usually in stock market there are three types of trend. One is uptrend, second is sideways consolidation, and third is downtrend. But and one more thing, in the world, we always see there is one or two war. Some war is going on in different places, different countries. But sometimes we see even after war is going on in some countries, but our stock market is not declining. The main reason is profit booking. uh, I think in last 1 year, Indian stock market Nifty 50 has given more than 35% return. Okay, so it is obvious there must be some profit booking. This is the biggest reason. Fourth is shift in foreign investment. China issue. China's economic stimulus measures have attracted foreign investment away from India, impacting domestic market liquidity. And the fifth reason is weak corporate earning projections. Anticipated lackluster earning reports from major Indian companies have damped investor confidence. Region 6, global economic indicator. It is also not good. Mixed signal from major economics, including the US, have contributed to market volatility. Seventh region, rising crude oil price. Increased oil price have raised concern about inflation and economic growth in India, a major oil importer. And the eighth reason, monetary policy speculation. Uncertainty regarding future monetary policies, both domestic and international, have led to caution market behavior. Ninth reason, global market trends. Downturn in other global markets have influenced investor sentiments, contributing to decline in Indian indices. So now we talk about FPI, foreign portfolio investors outflow. Actually, who are the investor behind FPI? The primary investor behind FPI are a mix of organization and individuals, including there are eight. Number one, institutional investors, sovereign wealth funds, government-owned investment funds such as Norway Government Fund, Pension Fund, or Singapore GIC that invest in global financial assets. Second is pension funds. Large funds like the California Public Employees Retirement System and Canada Pension Plan Investment Board invest in global market, including India. Third is insurance companies. Global insurance firms allocate capital in foreign equities and bond to diversify their investment portfolios. And fourth one is endowment fund. Universities and non-profit organizations such as Harvard or Yale's endowment fund often invest globally through FPIs. These are the institutional investor. Now we understand hedge fund. Actually, what is hedge fund? Hedge funds are the investment vehicles that pool fund from accredited investor and institutional clients to maximize return. Many hedge funds actively invest in emerging markets like India through FPI routes. Mutual fund and exchange traded fund ETFs. International mutual fund and ETFs, such as those managed by Vanguard, BlackRock, or Fidelity, allocate a portion of their portfolio to Indian assets. Bank and financial institutions like JP Morgan, Morgan Stanley, Goldman invest in equities and debt instrument through FPI channels. Corporate entities, there are so many corporate entities, they invest through the FPI. High net worth individuals, HNIs, they also invest through FPI. Family offices, they also invest through FPI channel. And private equity and venture capital funds, some private equity and venture capital funds also invest in public market through FPI license, especially when companies is transition from private to public. So these are the FPI. These are the investor behind FPI. Now we jump to our Excel sheet. As of January 2025, total market Indian market cap is 51 lakh 30,000 crore. Okay. And the contribution of FPI is 11 lakh 1,000 crore. Okay. 11 lakh crore, sorry. 11 lakh crore. And this is 21% of Indian stock market cap. And that is why when FPI withdraw the money, we see a big fall in Indian stock market because contribution is huge. And DII, domestic institutional investor, 10 lakh crore, 19%. And retail and other investor contribution is 30 lakh crore, 59%. Okay. Now we see how much money, how much percentage they, how much money they withdraw. In October last year, 91,000 crore withdraw by FPI. In November 2024, 20,000 crore. But in December, they invested 24,000 crore. But this month, in last 14 days, they withdrawn 27,000 crore rupees. Total 1 lakh 15,000 crore rupees FPI withdrawn from the Indian stock market. So that is why our we see there is big fall in our stock market. So now that you understand why the market is declining, it's time to take action. Will you let the market volatilities take your confidence, or will you take this opportunity to learn and grow as an investor? If you found this video helpful, don't forget to like, share, and subscribe for more insights into the stock market. And remember, the key to success is staying informed and prepared. Thank you so much to watching my video.